Ahora quisiera introducir a Adriano de Matteis. Adriano estudió matemáticas en la Universidad de Milán y desde entonces pues, ha desarrollado su carrera durante más de 20 años en diversas compañías de seguro y reaseguro. Actualmente él es Vice President y Director de Business Development en RGA para EMEA y desde su actual posición pues, se encarga de desarrollar e implementar soluciones de producto y de distribución. Y además nos va a contar que innovar en seguro de vida es posible y nosotros estamos deseosos de escuchar cuáles son las pistas que pueda darnos al respecto. Gracias, Adriano.
It's dangerous here. Thank you very much. First of all, I want to thank Luis and Carlos for inviting me to this conference. Thank you very much. It's very much appreciated, and it's an honor to be here. And I also want to thank you all for coming to this conference, and especially for creating a very friendly and professional atmosphere at the same time. I saw a lot of people with smile on their faces exchanging ideas, both yesterday and today. And I think this is thanks to you. And it's not always like that. I think, right? Well, that's very good. So thank you. It makes our job easier at least. So I think I have two challenges today. The first one is of course time. Luis is very worried about the many slides I have, so I can be fast. If you follow me fast, I will be fast. In any case, he had installed something electric here. He says it's the microphone, but I think it's to give me some electric shock in case I will be late. But anyway, I will follow Stephen's advice and use only one device, even for that, and I put the stopwatch so that I can look at time. And okay, it looks nice. The second challenge I have, it was given probably by Stephen as well, is that he almost convinced you to fire people that come with a new product idea. So my challenge is in half an hour to convince you to hire me back and that maybe we do need some innovation in products. Of course, it's not the only thing. We need to innovate according to what the customer may want. If we assume that they know what they want, sometimes they don't. But anyway, today my job is to show you some innovation in the space of product. And the first thing I want to talk about is two types of innovation. The first type of innovation is what I call, and it's called in literature as well, sustaining innovation. So basically, sustaining innovation is innovation that are dedicated to people and customers that are really demanding, and they are demanding, as we have seen in previous presentations. What they do normally, these innovations, they don't create new markets, but they evolve existing market and give a lot of value to what is already there. And of course, each company competes on sustaining improvements. This innovation can be even revolutionary or evolutionary as well. What do I mean by this? Probably to understand this better, we can think about razor blades. So maybe some of you remember some of your grandfather using the very old razor blade. So that was very dangerous. So a new razor blade was created that was safer, the one with plastic and so that's a revolution. The product is completely changed, but the number of clients doesn't increase. So we more or less shave. If we like to have a beard, we are not convinced by the new product. I think the first was created by Bic, I think. The number of clients is exactly the same, but the product is much better. It's giving much more value. It's safer, it's faster, and this is good for the customer. And then from that moment on, new innovations, sustaining, are created. So the next company comes and say, I have two blades. So one is to take the hair out of its place, and the other one is to cut it. And then, if you go to the supermarket now, you can easily find 3 blades for a much better shaving and so on, and even 4 blades. So that's what we call sustaining innovation. And probably a good example of this sustaining innovation, and we do need sustaining innovation, is the new critical illness that we are seeing in countries like South Africa and Asia, and that clients in other parts of the world are starting to ask us to quote. So just to know where we are starting from, the first critical illness product was created by, and that was an innovation in itself, by the brother of Christian Barnard. You may remember Christian Barnard as being the first man who managed to transplant a heart, a human heart transplant. So what happened was something very good. So now people survived after having heart problem. They didn't die, and for this reason, they could, maybe they had to stay at home or in the hospital for 6 months, 1 year, because they couldn't work, but they had no money. They couldn't work, they got no salary. And maybe they had a huge death insurance, 1 million, 2 million, that they couldn't really touch. So Marius Barnard proposed this new product. Although he was a doctor, there is a very, very moving video on YouTube, if you want to look for that, and the idea came to him after a patient, a woman, who had a problem and didn't have the money to take care of her children, but had life insurance, had that insurance that she couldn't touch. So it's a living benefit, paying to the survivor, not to the beneficiaries, or the beneficiary is the survivor. It's a living benefit, so you are living, usually to pay for expenses or to offset the salary that you lose by not being able to go into work. As you all know, the payment is, in order to avoid any complication, is given at the diagnosis of the illness, and then the person can do anything she or he wants with the money. So Marius Barnard was famous for creating a sentence that people don't actually need insurance because they are going to die, they need it because they are going to live. And that was the first innovation, if you think about it. So it didn't exist, and it was created by Marius Barnard. So, and it makes sense to explore critical illness, because if we look at the statistics, we can take this statistic in the UK. You can see from this slide that the number, this is dedicated to cancer, the number of cancers is increasing, also because of the better diagnosis system that we have, but the death caused by cancer are decreasing. So it actually makes sense to be covered when such critical illness comes, because you're gonna live. And the same thing is true for other illnesses like heart attack. So 80% of men and women in the age range 45-65 will survive a heart attack. And over 50% who had this heart attack are still alive 10 years later. Good news. Stroke, the same thing, is probably the largest cause of severe disability. So, for example, in the UK, 350,000 people are affected at any one time by this type of disability given by stroke, but these people survive. And so, at 70% at least survive more than 12 months. Just have a very, very fast picture of the difference in surviving in the 50s and in 2002. Just to compare, you can see the difference very, very well. So heart attack, it's doubled. Cancer, it's doubled as well. And stroke is dramatically increased. So if you look at the mortality 5 years after critical illness, from a study that was created by an actuary Horwitz that studied Danish pension funds that had critical illness, even in this case, the mortality after critical illness was just 20% at the 50th year. There is a slight difference between female and males, but the average is around 20%. And this is something new. In the oncologists in 2008, something new happened, and they say that recent data suggest that women who had early breast cancer are more likely to die of heart disease rather than recurrent cancer. So that is something really new. So what happens is that you may have more, not just one critical illness and survive, but even more critical illnesses and survive. What happens with a single benefit critical illness? It happens that it pays only once. So if you have a heart attack, you may got a good amount of money, let's say 200,000 euro, but then the policy is over. What if now you have cancer? You are not covered, and if you go to an insurance company to be fulfilled, as Stephen called it, they will not fulfill you. They will tell you that you can't have an insurance policy. So here there is a space for innovation. So because CI may occur more frequently than once in a lifetime, and it's not always terminal, we need to address this, and the new critical illness addresses this in two ways. The one is called stage critical illness, that pays benefits according to the severity, how severe is the illness that you have. And the other one is the multi-pay critical illness that will pay a sum insured more than once in your lifetime. Some details on these two covers that were born in South Africa and now are having a huge development in Asia. So just to show you that this makes sense, if we look at 10-year breast cancer survival by stage, and here I take the classic 4 stages. First one is localized, second one is when the tumor is going in other tissues, the third one is when it takes the lymph nodes, and the fourth one, metastasis. So that's a pretty classic, that's English, but it's pretty well known everywhere in the world. So the 10-year survival for patients in the first category is more than 60%, but it's less than 25% for all the others combined. With the normal critical illness, both categories would receive the same sum insured. So if you have a localized tumor, or for some, you may not even receive something for the localized tumor. If we take a 5-year survival rate for bowel cancer by stage, once again, over 90% of patients diagnosed with stage A cancer survived at least 5 years. But if you take stage D, less than 7% did. And they will both receive the same amount of money now, and it actually doesn't make sense. So the basic idea of the stage critical illness is very simple. So to pay a sum insured according to the stage of the cancer. So if you have 100,000 sum insurers, you will get 100,000 for the most severe metastasis, but you will only get 25,000 for a less severe cancer. This makes the product much cheaper than paying always the whole amount insured. And this, sorry, this product has been actually launched as an upsell program using simplified issue to people that already had a normal critical illness, to give them the possibility to get paid in case of small cancers, in situ cancers. And this has been created actually by the customers, because that was in South Korea. In South Korea, we received a lot of requests of small claims, and we had to decline them all because in situ cancers were not paid by the policy. But then we realized that the client was not happy because they still have the perception that they got cancer. So we created this stage CI cover with paying maybe a low amount, but then the client will have been happy because for a very small cancer, they could get at least 25% of the sum insured. So again, this has been created not just because it made sense, but because clients, through their behavior with clients, told us what they actually wanted. And this upsell was an upsell program on critical illness into several Asian countries. We started with South Korea, but then Hong Kong and Taiwan and so on. It was a campaign basic. And It gave strong momentum to sales because agents had the opportunity to go back to their clients after 1 year and tell them that the product has been improved, had been improved. So a kind of sustaining improvement. It's a better CI. That better means for the client it pays you more than the current product. The other product that goes into this direction is the multi-pay critical illness. So the other problem that we have is that, of course, this is cheap, but if you are paid for a critical illness, in this case it could be cancer, then the policy is being stopped. So the other need is what do we do after the person had already had a claim? Can we keep them on cover? And that's the spirit of the multi-pay critical illness. So it pays multiple times at 100% of the sum insured. So you can actually have 3 claims or more at the whole amount of the sum insured. In order to do that, I will show you, we will create 3 main groups. 3 groups that they have link impairments, like for example their circulatory system, or linked organ systems, organ that if got damaged, other organs will get damaged as well, and impairments that may have similar causes. So this is allowed for multiple claims. The number is sometimes specified, especially because of cancer. So sometimes they may say once for heart attack, once for Alzheimer, but maybe 2 or 3 times for cancer, because cancer has this behavior of recurring, and so it makes more sense to pay more times for cancer. So the 3 groups are, the first one, it is more linked to the heart attack and coronary graft and stroke, valve surgery, everything related to the circulatory system. The other one is failure of organs, so basically cancer, liver failure, renal failure, organ transplant, and so on. And the third one is more the neurology of the person, so paralysis, multiple sclerosis, Alzheimer, Parkinson, and so on. And if you actually think about it, the scenario that we will see more and more in the future is actually more people that may be affected by all of the 3, at least one of the illnesses in all the 3 boxes. So you may have a very small heart attack. Heart attack doesn't need to be dramatic. We all know people that told us that they had a heart attack and they lost 5% or 10% of their heart functionality. So they are still alive. They may even exercise and get fit. But then maybe 10 years later they may have a cancer, or even in situ, or mildly severe cancer. And then when they are becoming older, they may have Alzheimer or Parkinson. This was a scenario unthinkable 40 years ago. Each one of those illnesses would have caused us to die. But now it's actually true. People may incur in more of these illnesses during their lifetime. So some consideration, of course, of this product is complex. And when I say complex, it's complex for us. But sometimes for the client, it's not that complex, because if you tell the client that if the cancer is small, he gets a small amount. If the cancer is big, they get the big amount. For them, it's very simple. For us to price it is very complex. But for them, it's a very easy and simple concept. It gives them more. So we need statistics to price it, of course, and that's why it emerged in markets where critical illness was already existent, and so there were statistics about the cause of the illness and the severity of the illness as well. Although we can adapt it to several countries, and we actually did. So the definitions are crucial. So the way these definitions are created must be very close to the medical definition rather than descriptive. So we are not using descriptive, or as little descriptive as possible, but we tend to use medical terms. It's worse when the client buys the policy because nobody understands what they mean, but it's easy when they get sick, because then they exactly know what it's about, because the names and the codes that are there are exactly the codes that are used by doctors. Of course, you may have some problems with claims, so this needs to be clarified. In some countries where litigation is the norm, it's very difficult to create critical illness. This is one of the reasons why it doesn't really work well in the United States, because for every claim you are being sued by the person, and they think you have to pay. And of course, it has to be marketable. It has to make sense for the country or for the network, distribution network, to offer this to the client. I want to show you one practical product, that is this cancer care product that we created together, of course, with a multinational insurance company in Australia. And this is a kind of summarize everything that it's about sustaining innovation. So there is everything there. So it's the first cancer-only product in the market, by the way, and it's a good thing to focus and to really segment the offer. For people, it's very easy to understand cancer rather than critical illness, and it looks like an insurance product. With cancer only, it looks something that talks to me, and yes, everybody's scared about cancer, especially in some countries. It's distributed only through the internet. So that's very sustaining innovation as well, technology. And the fulfillment phase is done without any blood test or any medicals required. So the person uses an e-underwriting tool. In this case, it's our underwriting tool called Aura. So the person answers to questions over the internet, and then, based on how he answered or she answered the question, he's been accepted, rated, or declined. And it's linked to the Australian Cancer Research Foundation. It's always a good idea to create this type of word of mouth and also social function of insurance. At least that's what we did in Australia. So the product is severity-based. The level of cancer will get to you different sum insured. There are 4 levels of cover to make it easy. You can choose 4 packages, let's say from basic to advanced to deluxe, if you wish. And for marketing reason, instead of telling that we pay 25% or 50%, it's much better to say we pay you once if it's a mild cancer, twice if it's more severe, 3 times if it's really severe. It looks better. The concept is, of course, the same. And it also allows for multiple claim. So this is both a severity-based and multiple claims critical illness. So more complicated than that, it doesn't exist. Then, of course, 10% of premium donated to the Cancer Foundation. And finally, as an upsell, there is the option to buy a Cancer Care Plus. And in this case, it becomes a more complete critical illness with 22 additional medical conditions that they are now very similar to the classical critical illness, like heart attack, stroke, and multiple sclerosis. So that's an overview of the 3 levels. It's more for you to review the slides when you will get them. So the levels are 3. So basically, the 2 central levels have been compressed into 1. It makes it a little bit easier. And I don't know if you can see, but if you look here, you will see the typical code that are used when you are diagnosed by a certain cancer. So you will see the code, and you go to the insurance company, and we have the same code. So there is no claim disputation at all. Just very, very, very briefly, the customer journey is very easy. So you have this typical first page with also the encryption to prove that you can play with that if you wish, to look at rates and how it works and questions. You just cannot have the policy because you need to be an Australian citizen. So, but you can play with the tool. So they presented first the quote, and if you like the price, then you go to application stage and you answer a few questions. In this case, I've showed here what happens when you answer with a yes. So what happens here when you answer with a yes, for example, I had diabetes, the system doesn't say, okay, you are not, we cannot accept you, but opens up other questions that ask you more details about your condition. It can be diabetes or it can be something else, of course. If the questions are good, it closes them. If there is another problem, it opens up as another level to ask for details. No more than 3 levels, though, because too many levels, then the client is not happy. So that is is a system that it's responding to what the client's self-reflection system that responds to what the client answers. And this is to optimize the chance that we take in insurance, even people that had very, very small conditions that are not really serious, but that may be refused if we don't ask them further questions. And we don't want to send them to the insurance company and start the whole underwriting / fulfilling process. At the end, you receive a confirmation if you are accepted, decline, or rated. So that's the product that's, to me, it's for, as far as I know, in the field of the pure protection product, is the most complex, using everything available in the market, stage, multi, internet, reflexive system, and so on. But what happens is that if we think about it, and this is a sentence by Clayton Christensen, the author who created the word disruptive innovation. So what happens is that, in general, when we try to innovate in this way, sooner or later, it becomes very complicated. If you look at the financial product, insurance product, and you try to understand how they work without an advice, it's actually a very complicated word, not easily understood as my stopwatch here that I check to see. Okay. So I want to talk about something that I think may be disruptive innovation. So there is a question mark. I believe it can be disruptive, but of course we don't know it yet. So it's a question mark. What is disruptive innovation? So usually when you think about disruptive innovation, they are very easy from the point of view of technology. So they use technology in a very, very simple way. They have off-the-shelf components. You just take them. You don't tailor-make them. You take them as they are. The product is often much simpler than prior approaches. So the product that is given to you is very easy to use. What is interesting to notice is that probably one of the reasons why it's very difficult to think about disruptive innovation is that the key element of a disruptive innovation is that you need to be very careful and very brave in choosing something that you don't want to offer anymore. So if you think about EasyJet, for example, EasyJet's success, like all other disruptive companies, was exactly not to offer anymore something that was considered normal for all other airlines. So food on board, very far airports with no shops, so less offering. And this type of things, no services. You just had to, especially in the beginning, you just did everything online, check-in online. There was nobody helping you at the check counters. So what EasyJet did was to offer less on many parameters, and for this reason they could lower the price and be disruptive. And this is very difficult to do because, of course, everybody's thinking in terms of sustaining innovation. I want to do it better. I want to do more. I want to give you more. I want to give you something better. And the key distinction, that's why sometimes we don't know firsthand if it's a disruptive innovation or just a revolution, is that it should open up a new world of customers. So in the case of EasyJet, it has been a disruptive innovation because now a lot of people, more people are actually traveling thanks to low cost companies. So in this case, you see that it's the other characteristic that disruptive innovation has is that you cannot compare the old products with the new one. So, for example, if you compare a manual typewriter with an electric typewriter, well, the comparison is still possible. It's more efficient, it's sustaining innovation. But when you compare a typewriter with a word processor out of a computer, the comparison is not possible anymore. So this is really disruptive, and it kills forever the typewriter industry, as we have seen. So in this case, I want to present especially one example, and there are others. This example is good because, and it's about predictive analytics. So we heard big data several times today. We are hearing big data, predictive modeling, and so on every day. So I think everybody knows what we are talking about. So I just want to tell you about this exercise that we did with the bank insurer in Asia, in Singapore, based in Singapore. What they wanted to do is to increase their sale penetration into their bank customers, sell more life insurance to their bank clients. And their first analysis, their research actually proved that the reason why they couldn't sell more, it was because of underwriting. So this process that is always considered a burden by agents and banks, especially in the bank, for obvious reasons. So the bank was thinking about, can we analyze data beforehand and instead of underwriting people, just fulfill them directly and tell them that you can have this policy just by saying yes. We don't ask you any question. So that was the basic purpose. So if we would know in advance who is likely to say to qualify, then we can just send them a letter or call them and ask them to say yes, and then they can be insured with the same conditions of a full underwritten policy. So this would be much better for the sales staff. The expenses, acquisition expenses, will decrease, and of course, sales volume should increase. So I think I can skip this one. You can read it afterwards. So this is the lift curve, as our actuaries call it, that resulted out of this predictive exercise. So first of all, we had 85 variables that we could look at: demographic, age, gender, postal code, nationality. Of course, nationality, because in Singapore there are several nationalities. If it's done in only one country, it's less relevant. Marital status, and so on. Bank products, bank insurance product that they had. And we had, of course, the possibility to link at least some of this population with the underwriting decision that was made when they bought a life insurance product. This is very important. What we found is that only 11 variables were really predictive, and age, gender, of course, is always the two most predictive everywhere. But in this case, the asset under management that the people had was really predictive. So the richer, the less likely to die. Life is unfair. And at least in some countries, for sure. And also the branch, so where people went to the bank, so where they located, it was also, of course, a sign of the type of lifestyle that they had. The good thing about this exercise is that you don't find anything related to health. So there is no variable that is linked to the health of the person, right? Because we don't know the health. We want to send them a letter without knowing their health status. And by the way, the health condition, it was not anyway the most predictive variable. It's probably more of a result of other things, like lifestyle, money that you have, opportunities that you have to take care of yourself. So what we need to look at here is the empty spaces here. So that's the difference between an average non-standard rate and how the people in this class would be rated, to put it simple. So what it means is that these are 10 deciles we divided the population in. That means that if you look at category 9 and 10, they could receive a letter and a guaranteed policy, insurance policy. just by telling them, accept it and it's yours. And also, category 7 and 8 would get them. In this case, we would ask a question like, just confirm that your health status is the same as it was 1 year ago, and you don't have anything new to report. So in that case, 40% of this population could be addressed in a completely new way, without underwriting them, without asking any question to them, but just telling them, we know you, so we can react to what we already know about you, not to spy on you, not like the CIA, but to give you a better service. It's our job to know about you and to give something to you that fits your needs and that it's easy for you to use, in this case insurance, to accept and to be fulfilled. So that could because it's one of the few exercises where this separation is actually that dramatic. Sometimes it's not that dramatic. Sometimes the difference is 5, 10%. That it's not really helpful because you can offer a very small discount and you don't really know who will be likely to die and who will be likely to live. But in this case, it's 4 times. And we have other cases where it's 5 times. So if this predictive modeling goes on in this way, I think it can actually be a very fast way to approach clients in the new world, showing them that we know them, showing them that we have something for them, and they just need to say yes without going through the classic insurance process that for many people it seems to be burdensome and difficult to do. So I will stop here and thank you very much. So if you have any questions, I will be here and please ask. Thank you again.
Well, thank you, Adriano.